Welcome, and thank you for logging into this resource, which is dedicated to providing you with additional information about Brantford, along with some effective strategies around how to invest in Brantford.
When it comes to employment, the largest employers in Brantford are Ferrero Canada Limited, Mitsui High-Tech Canada Inc., and Worth Industry of Canada. These are well-paying and secure jobs.
Located just west of the most densely populated corridor for economic activity in the country, Brantford is only 30 kilometers west of the city of Hamilton. And as the Golden Horseshoe continues to experience what's known as the Manhattan effect, with Lake Ontario to the south and the world's largest green belt to the north, the lack of land to develop within the Golden Horseshoe will continue to force migration to secondary and tertiary markets like Brantford. When it comes to municipally owned land, the city of Brantford has just one remaining property for sale. However, there are various private land holdings that offer existing and prospective firms several development options. The city of Brantford and its neighboring County of Brant have just reached an agreement for boundary expansion, and within that agreement, a total gross area of 2,720 hectares has been transferred to the city of Brantford, along with a total residential land gross area of just under 2,000 hectares and a total employment land gross area of about 740 hectares. As a designated urban growth center in the province's growth plan, Brantford has specific employment and population targets to achieve. And as a result of these economic forces, it's forecasted that a total of 79,000 new jobs will come into Brantford by the year 2041. Now that the city of Brantford is currently home to 102,000 people and is expected to grow by almost 60% to 163,000 people by the year 2041.
Brantford is also set to benefit from the new GO bus linking to the GO train services. The impact of this development cannot be overstated. In addition to improving transportation for residents leaving the city every day, the service will also provide vital access to attract interest, innovation, and investment in Brantford.
The recent effects of COVID on housing has really fueled what is referred to as the ripple effect. Brantford has for a long time been known as a tertiary commuter community for commuters into Toronto, but as a result of more virtual workplaces, many homeowners and tenants are leaving the city and residing in larger properties and larger homes. Price and rent affordability is also a catalyst for tenants and purchasers to drive until they qualify. Now, for those of you that are savvy investors and are looking for some of the fundamental metrics, get your pens ready. The current average home price in Brantford is $488,000, which is up by about 15% over last year. When it comes to vacancy rates and average rental rates, a standard one-bedroom vacancy rate is around 1.8% and rents for $1,050 a month. A two-bedroom vacancy rate is hovering around 2.1% and rents for $1,100 a month. And a three-bedroom vacancy rate is hovering around 3.6% and rents for $1,178 a month. So one of the most commonly asked questions that I receive almost daily is, how's the market? And whether you realize it or not, when you are asking this question to a realtor, what you are essentially asking is, are we in a buyer's market, a seller's market, or a balanced market? The market intelligence tool to find the strength of the market, or what is known as absorption rate of the market, is what we refer to as months of inventory. A seller's market is defined as 0 to 4 months of inventory. A balanced market is defined as 4 to 6 months of inventory, and a buyer's market is defined as greater than 6 months of inventory. Now in Brantford, we're currently sitting at roughly 1 month of inventory, which is an extremely strong seller's market.
As an investor, all of these metrics are really important to help identify effective short-term or long-term, as well as negotiation strategies and tactics.
Some of the most effective investment strategies that we see in Brantford include the long-term buy and hold, as well as strong positive cash flow, because of these realized and ongoing forecasted price appreciations.
Now I'd like to introduce you to one of our sales partners, Shauna Conley. She's one of our investment specialists and she's very active in the field. She really knows her stuff.
Shauna is going to share with you a recent success story as to how one of our clients effectively used the strategies to grow their portfolio and build generational wealth.
Hi everyone, it's Shauna here from the Huddle Group. I'm here to take you guys through a recent client success story that investor clients of ours have just purchased. This will showcase the strategy we were trying to achieve and how we got there while navigating the Brantford market. We knew that we wanted something turnkey, legal, and with positive cash flow. So when we came across 331 Erie, we knew it was the right fit. The property is currently tenanted in 2 out of the 3 units, leaving 1 unit vacant and ready to rent. This wasn't concerning for us, since Brantford has the lowest vacancy rate out of the 3 major cities that we service, and we knew it would rent out fast. The property was located in our Eagle Place neighborhood in Brantford, which checked all of the boxes in terms of demographics that we wanted to attract in the rental property. The property was already set up as 3 units, and one of the best features of this home is it's already totally renovated on the inside, so it was a completely turnkey investment for our client. With quick timing, we were able to beat out any other potential buyers that may have been interested and tie this property up for a purchase price of $750,000. With 3 turnkey units in this price, the financial outlook looks very favorable. So let's walk through what that looks like. The unit mix in this home is 2 2-bedroom units, which were already rented, and 1 1-bedroom unit, which is vacant and ready to rent. The property had coin-operated laundry inside, which brought in an additional income of $150 a month. After deducting our vacancy rate, we're left with a gross operating income of just over $4,000 a month. So we know what our income looks like, but let's take a look at our expenses. After we take off our property taxes, insurance, utilities, repairs and maintenance, property management, we're left with a monthly operating expense of $865 a month. It's important to note that this client in particular wanted to manage the property themselves, and therefore we did not have to budget in a property management expense. The rents on this property are all inclusive, so the utilities budget was over $300 a month to compensate for hydro, gas, and water. So we know our income and our expenses, but let's take a look at our debt service, or also known as our monthly mortgage payment. So the clients went with a traditional 20% down structure, given that it's a secondary property, which leaves us with a monthly mortgage payment of $2,367 a month. So we know our income, we know our expenses, and our debt service, which leaves us with net monthly cash flow of $846 a month. If we want to dive into our ROI, we first have to look at the cash that's invested in the property, and this is comprised of your down payment, any initial improvements, which in this case is 0 because the property is completely turnkey. Building inspection, appraisal, land transfer tax, and legal fees leave us with a total acquisition cost of $164,275. So based on the total cash invested, we can now look at our 4 ways to win formula. This leaves us with a total year 1 ROI of 37.3%. If these financials look attractive to you and you're eager to learn more about how you can secure property of this nature, and if you haven't done so already, please don't forget to register for our Deal of the Week in our Hamilton Investors Report by clicking the registration link in our booth. We hope you found this helpful and looking forward to helping you achieve your real estate investing goals in the future.